Hey, how you going? Back with a new video for GBP New Zealand dollar. Basically, I'm going to go over today the monthly, weekly, and daily technical analysis. So I've already done pre-markup, and I've already contributed to Tradingview and the Telegram free channel, previously ideas on GBP Nzd. However, some have taken shape and some others have gone against me, and I'm the first to put my hands up and admit I'm never going to get 100% right. However, if you take the opportunities which are presented to you, then the probability lies in your favor upon confirmation of technical rules. But let's go over this anyway. So again, looking back in the market structure, in the historical prices, you can see that there's been a large sell-off standpoint from where Brexit took place, a little pullback, continuation of pullback, and then the real driver, which created the all-time low. However, since then we've been forming a bullish pattern, consolidated periods when nothing's happened, and then obviously during the coronavirus incidences, this massive wick fill, which has come back to the fresh level and original level here. So that's now the first tap, albeit that can be the first considerable tap. But this is now, that was original level, sorry, and now it's a FL, stands for fresh level. So that can be there like so. Now coming in towards 2022 area, the markup changes as time goes on. So we've drawn an infinity line here, which takes shape and does capture a majority of instances where the trend line fits. I don't fit the trend line to fit best, however, it's more a regressional purpose. So yeah, at present, there has been a previous spike back in May, which has taken us under and failed to touch this zone. However, this has been tapped a few times now, as we can see. So let me just get a pin. So you can see the original level is bullish here. The first taps correlate to a previous low of the body, and now we've got a lower high here and multiple taps. However, in this instance, the zone is still poised as strong as the overall market in favours GBP over New Zealand dollar, despite NZD being a commodity-based currency. There is, however, confirmations for a downturn to this level, subject to literally a price crash and all commodities become just major inflows, essentially. That will see like silver and exports from New Zealand in terms of their agriculture going up. So that can cause the New Zealand dollar to get stronger for export reasons. Looking at a technical side though, this is a fresh monthly level. So we've got the first tweezers here on monthly, and you can see that it's gone down and retested the 187 zone. Now we're on our way back up. So this is the primary target for our long position. I've got my positions in around here, and it stops normally about 100 pips. The reason for that is to let it breathe, because when you're a position holder, you want it to breathe a bit longer, and you can take on the cost of carry, adding hedging positions along the way. This is my strategy. It's up to you if you are a impulsive day trader or a swing trader. You obviously look for your confirmations on lower time frames. So my targets are around here, and if they extend to 206 to fill this wick, then I'll be really happy with that. But obviously, the first target will be 203 roughly. So this is a fresh level. There's an upper level here on monthly, and again, this can be probable, highly unlikely at present, but who knows what future price will tell us. You can only go with the pathway upon confirm. So it could do some of this in the future. We don't know. There's no way to distinguish tops. You'll look at previous market structure to assist. So moving on to the weekly, we have another pre-markup, and this just highlights again the steep curve, which has been bearish, which took place from obviously at the start of February, where a market top had hit from an extension pattern. Now you can look at your Fibonacci extensions here, taken from the low up to here as a 0, reverts back to, let's say, 0.382 Fibonacci level, and then extends as an overextended pathway. I did look at that opportunity in the past, but did not really take it. I would have taken a few inter-weekly trades here and there, and lost and won a couple. Now you can see there's been 1, 2, 3, 4, 5, 6, 7, 8, 9 weekly candles to the downside. Pretty incredible stuff. If you took this short, you'd have made a lot of pips, and pips are important. The money comes second. If you have a small trade, compounding your account is priority here. Don't go for the big jumps. You can get in alive very quickly. It's a fresh level, so the top of the market is here. I consider this being the primary key candle here because it's the confirmation. This is just an indecision weekly, although favorable to the downside from bearish. And looking across to market structure previously, it does tie in with this key candle here of an inside bar on a weekly, and does also does actually net off here with that previous candle. So if you look here in this previous structure, this is key, absolutely key. Let's just join a click around here so you can see. So it is a wide zone, but wicks do tend to fill previous netting off zones. So look at that highlight, perfect. It takes a lot of patience and understanding to get the literal market top. But as I said, you can't predict this. You can, but how many people in reality trade it? Not many. So now we've seen a great instance here of 9 bearish move candle sell-off, which is perfect. You've had the high curve broken and confirmed on the weekly with a large wick, which has retested the zone. On the daily, this would prove a reactive test, most likely, which is kind of what we're looking for here. Being the second, that's a deep correction here, right here, and it would have chucked out a lot of bearish sellers and done a bear trap, that's for sure. But in this instance, because it's a deep correction, again, netting off around here, market repeats the structure. Not literally like for like, but in most instances, it allows opportunities here for the favorable who are patient. So now the market's gone up for 4 consecutive weeks, done a real big pullback. Again, a lot of traders who see these wicks would have taken multiple shorts, and I can understand why. However, it's a long game here because it's retesting a zone. So taking your Fibo again, you can take it from the low to the high here. Sorry, here. So the pullback would be around 50 to 61. The golden ratio, although subject to a deeper correction, is highly probable to the 70. Then upon confirmation again on the daily and 4 hour, you can then trade your long. Again, a retest. However, this is now a strong zone to mark on a weekly. So let's just chuck this in and leave it on a weekly and daily. So here, the market created the top also, which is the hurdle on the way to the fresh level. Due to this rejection, you can call this a large trading zone and trading range or consolidation pattern. Market here has also tested this previous candle, which fits very closely to the low close of that bearish week. This aligns nicely, although in reality, you're kind of looking for a 50% of this bearish candle, and that does align quite nicely as well. So let's keep that there, and also let's chuck this on the daily, which it is. It might be a bit confusing when I go through it, but this essentially is your trading range at present. So price can bounce like this for weeks to come. I don't know, and I'm not going to be a magician and tell you all that I know the answer here, but you trade on probability, right? And PCP rules. So this is our arrival destination. This is our departure. This is the original departure here, or your demand area or demand imbalance. So again, this is a new, fresh weekly demand imbalance. So we'll just call it DMI. And let's go to daily now to check that out. So again, another little markup has been done. Fresh high curve in the past, a steep weak curve. And again, this highlights very nicely and does almost fit very well with the weekly, albeit it is a slightly lower. However, it's not too problematic due to the daily break, the breather, just shows that opportunity for a fresh break. So due to the strong curve over here, it aligns nicely with this perfectly. So exactly what we're looking for is just literally an opposite position going down in the bearish market. This now acts as your fresh level as a base for the daily. So again, we've got another high curve, an immediate sell-off, which has now tested this strong weekly new demand in place. And then from here, we have a strong new DMI. So this is our daily fresh level. Price has almost retested, and you can use the entire candle if you like. It's a bit of a big zone. It's 150 pips zone, and it's, to most traders, they'll be off-put by that entirely. But what you're looking for is netting opportunities. So price nets pretty nicely here with that. Let's just show that. So yeah, that's what you want to see in reality, and then you can take your longs from here. Because it's now produced a lower high, let's just draw a line like this. This is not a be all end all. Price can break back down below and retest before shooting back up. So do keep that in mind. Again, this is creating at present lower highs like that. But let's see if we get a squeeze into a diagonal like so over the coming weeks and days presented. And then you can see either this fake out pattern happening or direction changing to keep the imbalance preferable to the bullish scenario. Again, longs are taken from here, and we'll be looking for this hurdle first. Once the hurdle's in place, let's say if market breaks, hits this level, shoots back down, and then shoots again, back up in here. This has now been tested multiple times. The zone is weaker, the probability is in favor of the longs, so you look for a break and retest most likely, and then your final destination point will be somewhere around the 2.03 plus. And I don't know when this is going to occur, but I personally will be taking longs upon highly probable zones which are fresh. And again, for my confirmations, I'll look at the 8-hour and 4-hour for my confirms. So I hope that helps you. And I haven't forgot the SPX video is coming out very soon. I will get my video ready for that. And yeah, please leave a like and share the video. I'm only brand new here in YouTube, so yeah, anything helps out. All right, take it easy. You're it.